Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Hello, welcome back to the Risk Intel podcast. I'm very excited to have joining the podcast again today, Shawn Ryan, the Chief Financial Officer and Chief Risk Officer at SRA Watchtower. Shawn, welcome back.
Thanks for having me, Ed. I'm thrilled that you all keep bringing me back. Glad to be here today.
Shawn, we were speaking just last week as we prepared for our audit and risk committee meeting that is coming up this week ahead of our quarterly board meeting, and we were looking at our top risks within the ERM module within SRA Watchtower, and we were looking at the risks that we had there and thinking about and considering whether there are any other emerging risks that we should be identifying and reporting on to that risk committee. That came on the heels of a session that you ran recently at the University of Virginia's Darden School of Executive Education, where you were talking to bank execs about top emerging risks. So I'd love to start the conversation today with perhaps drawing upon some of the observations that came out of that educational seminar that you ran. So let's start with top emerging risks. Let's start with the top three, let's say, and then we can come back and unpack any additional ones. What were the top three risks that came out of that session there with the folks at Darden?
Sure, I'll get to that, Ed. But if I might do just a tiny bit of setup, right? When we think about preparing for our risk committee meeting, not only do we do a bottoms-up look at risk, but we also do a top-down look at risk. And so when I help you prepare for that, I go outside of the shop and I look at current literature on top risks. And one of the places that I follow regularly to identify kind of emerging trends in risk management and emerging trends in risk is NC State University's ERM initiative. So some of what I'm going to say today builds on that or comes out of that, and that's some of the material that I shared with folks at Darden. The top risks that you and I actually talked about the other day, all three of the ones that I'm going to mention now, I cited as top risks for our business as well. So the first of those is cybersecurity threats, cyber threats. The second is AI and its emergence and what that means for financial institutions of company of all sizes. And then one that persists, I think, throughout time is the risk and the difficulties of finding and retaining and attracting top talent. So AI is the new frontier in finance, right? I don't know if you watched the Today Show, but there's almost a constant drip of information about what's happening on the AI front. Every piece of technology that we utilize in our personal lives and our professional lives now has some component or some connection to AI. We see chat bots, right? You see videos that are completely fabricated, and this has a lot of consequences for financial institutions. Financial institutions are always trying to adopt that into their business model, but they have to worry about things like bias. They have to worry about things like fraud and errors, and not only for the financial institution itself, but their third parties who are also maybe utilizing AI. That's a serious consideration for the financial institution, how their third parties are using AI. The second thing I think is very related to this is cybersecurity and cyber threats. The ability for fraudsters to attack an institution or to attack a business is increasing dramatically every day. Banks, thankfully, have pretty strong guardrails in place in order to protect them from these kinds of threats. But just like deep fakes, right, and phishing campaigns and all of those ways that fraudsters are trying to get into the financial institution, try to get into your customers' financial data and information and take advantage of those folks who aren't as savvy as the bank itself. That just creates a tremendous risk for the banks, and that's not going to decrease anytime soon. Finally, talent, right? In a world where we've been out of the office for the last couple of years, and a lot of financial institutions and other businesses are thinking about How do you perhaps draw people back into the office? Where these new skills that we just talked about, cybersecurity, artificial intelligence, these are new skills that you want your employees to either develop or have. You're going to need to cultivate. And then people are, working different kinds of jobs than we've ever seen. They're working part-time jobs. They're working for multiple companies at the same time. So it makes it very difficult for the financial institution or any company for that matter to attract and retain top talent. So those would be my three top risks, Ed.
I'd like to touch, maybe revisit each of those very, very, very quickly here. I want to go back to the AI topic, which you started with. And right, it seems to me like it's a conundrum here, because the risk of not embracing AI puts you in a position where you could get left behind because your peer institutions are embracing it and utilizing it.
Sure.
But equally, the risk of embracing AI is high as well, because you talked about bias and right, the challenges and the obstacles that come with it. So it's a bit of a challenging dynamic there, right? It's right, you're damned if you do, you're damned if you don't, right? But it seems like the answer is you have to do something there, right? Regardless, right? The answer is status quo.
Yeah, I mean, think about the way we started. We're using AI within our company in order to improve the productivity of employees. So we've deployed it inside a box for just our employees to use in kind of their day-to-day activities and see how that might increase their productivity. But what is the first thing we did? We wrote a policy about it, and we validated that our policy was going to be understandable to all of the folks who would be bound by that policy. I'm sure all financial institutions are engaged in the same thing. The bank or the credit union also has to think about what are the regulators' expectations with respect to deploying AI in the bank, and so, or in the financial institution. So that's a consideration that makes it extra challenging for an FI. But clearly, if there are institutions that are doing credit decisioning using AI, or institutions that are doing risk modeling doing AI, and you're not doing it, then they're leaping ahead of you very quickly, and they're adding insight and knowledge to their institution that you're not going to have if you don't take advantage of these new technologies. So I agree with you. You're damned if you do, if you're damned if you don't. It's not going anywhere. On the list of top risks that I mentioned, it appears in three different formats. So it's something it's real. It's here now. You hear about it every day, and the best companies have to figure out how to manage in this new environment.
So I'm going to say that you can really think about that AI risk as being both, playing offense and defense there.
Yeah.
Cybersecurity, though, I'd say is pretty squarely a defensive play. And with the sunsetting of the FFIEC CAT tool, right, and now kind of new risk frameworks out on the horizon, that certainly is an area that financial institutions need to make sure that they are up to speed with the new regulatory expectations, and as well as just maintaining the operational rigor there as well.
Yeah, cyber hygiene isn't optional, right? You have to have the best tools in hand. You have to have the smartest people on your staff, and you have to have multiple lines of defense in order to secure your financial institution against these kinds of threats. And I am not, although I play an expert on TV in this particular topic, I'm not a deep expert in cyber security. And I would just say that we focus on it a great deal here at SRA Watchtower. And maybe I'll leave some additional conversations about the frameworks that you can use to manage cybersecurity for a future podcast with a guest slightly more experienced than I.
Fair enough. The third area, talent, right? For many of us, right, we are people businesses, right, within financial institutions, and as powerful as data is, and systems and technology and brand and customers, right, it begins with our people, right? And you talked about both retaining, but also attracting. And I think, you know, in an environment where perhaps the skill sets are evolving that are needed, right, to compete and thrive. You know, certainly in community financial institutions where perhaps historically they were limited to the geographical footprint of their institution. Now you see more and more situations where, right, the same way that you're not limited by customers that are just within your geography, you're also potentially opening up to attracting talent through a wider lens as well, which is an interesting way to think about that talent risk.
Yeah, look, you know, Ed, we've worked together for a couple of years here at SRA Watchtower, and you know, I fancy myself a people first CFO. I think you probably would fancy yourself a people first CEO as well. If you don't have the right talent in your company, it doesn't matter how good your product is or how exceptional your strategy is or how much financial support you have from your investors. You're not going to succeed. The people are the ones that get the job done. I think, you know, I label this as number three. It might be number one because, to your point, we need people who understand how to manage cybersecurity. We need people who are on the cutting edge and incorporating innovative technologies into their day-to-day activities and the activities of the financial institution. So, you know, the people question is maybe the biggest question of all. You have to be flexible. You're right. We're in a lot of sales calls, conversations with prospects and customers, and no surprise, oftentimes the bank in Mississippi has a chief risk officer in you know, Colorado or something like that, and that's because you are able to, in this current environment, able to attract talent from outside of your normal geographic footprint if you're willing to do so. If you're willing to do so, that's one of the most important things. How do you do that effectively? So how do you have a distributed workforce and then allow that distributed workforce to develop a culture and a behavioral mindset that's consistent across the entire organization, in spite of the fact that they may not all sit in the same office every day? And I think that attracting and retaining, being open to attracting talent outside of your normal geographic footprint is important. But as important is figuring out how you're going to make those people who sit outside that footprint feel like they're part of your culture, part of your institution, that they're all you know, speaking off the same, you know, page of music, if you will. And that's one that you and I wrestle with, that our leadership team wrestles with, and we hear it when we talk to our clients as well.
Yes, and that's one where, right, if I go back to the, you know, offense and defense, right, and AI is maybe offense and defense, maybe cyber is defense. This is offense and defense as well, right? We talked a bit about attracting talent, but the same way that you can attract talent in, then the talent which you have is able to be attracted by other institutions that are not necessarily just down the street. So you have to play some defense there as well. And as you said, you've got to make sure that they're challenged and supported and developed, and it is an environment that they want to continue to operate in.
I mean, I didn't even say anything about pay, but that comes up in most of the risk rankings too, right? Now you have a workforce that you know, effectively are global free agents.
Right. Yes. I'm going to avoid that topic. We could go off on a whole host.
Yes, we could. Absolutely.
You talked about three areas there: AI, you know, cybersecurity and cyber risk, and talent as top three emerging risks. I'm going to characterize those as really, I don't know if micro is the right terminology, but really very kind of institution specific. But then there are risks also that are emerging that are, you know, outside of their four walls or outside of their control. So what other emerging risks are out there that you would classify as top emerging risks that are perhaps outside of the four walls of the institution?
Yeah, I'll just bring up two, and they're fairly, I think, obvious to risk managers and casual observers, right? The current economic conditions, both in the United States, where the institutions that we work with reside, but then across the entire globe. Now, first of all, we live and work in a global economy. That's been the case for a long time. Although, you know, recent you know, political decisions and political changes have created some changes in the relationship between the United States and other nations, and so that introduces some risk into the system. Certainly, there's inflation is still a challenge in the United States. You can see the volatility in the global markets that creates a challenge. Although we have somewhat stable interest rate environment, financial institutions are always concerned about changes in the interest rate environment, and that tighter credit markets, shrinking margins, those are all continue to be items that the financial institution has to manage and pay attention to. And we may be in an unprecedented economic time. We've been in a boom for an expansion for a very long time. They don't last forever. You've seen a little bit of an economic contraction recently. I think it's bordering on an explicit contraction. It's around 10 correction. It's right around 10% now. So that adds a lot of risk just to the external risk to the financial institutions management. And then the next one that I would say is related to changes in our administration here in the United States. It's regulatory uncertainty. So it looks like we are in for a period of maybe a more relaxed regulatory environment, and banks, certainly as they have in the past, will take advantage of that. It's possible that we might see some bank growth or new banks emerge in that kind of environment. But the challenge for the financial institution is that administrations change. And so if you suddenly get loose with your behavior in the middle of one administration, you could very quickly find yourself in a world of hurt if a new administration comes in and then there's a more stronger regulatory environment. So that's a risk. The risk of the changing regulatory environment is something that the financial institutions also have to pay some attention to, neither within their control, other than the potential for banks to, the lobbying organizations that we're all familiar with, to help the banks navigate those changes in the regulatory environment.
All right. Artificial intelligence, cybersecurity, talent management, the macroeconomic environment,
Yes.
and the regulatory change, and the swimming of the pendulum there, right? 5 very clear, emerging risks.
Yes.
How can risk leaders, and maybe this will be my final question for today, is how can risk leaders or board risk committees or boards of directors keep track of and manage all of these potential emerging risks?
Well, I mean, this all comes down to the one of the points I made under talent, right? The effective management of risk requires an effective culture around risk, or culture that is risk oriented. The last time y'all had me on the podcast, I spoke about the relationship between risk and return, or risk and strategy. You have to have an integrated model that considers not just what your strategic objectives are, but what are the risks that stand in the way of or create some drag on those strategic objectives. That culture of risk awareness has to be pervasive. You in the financial institution space, we talk a lot about the 3 lines of defense. Not only do we have to have 3 lines of defense, but we have to empower everyone on all of those lines to be risk aware and to be willing to speak up and say, hey, look, I see something here that's risky for the financial institution, that's risky for my particular line of business, that's risky for my operation. And there has to be a culture where that awareness is rewarded, and that willingness to say, hey, look at this is seen as a positive behavior. We need to do continuous monitoring. I mean, that's what we do. We utilize our own tool, SRA Watchtower, to monitor risk. I started by talking about the literature that I read. It's incumbent on every leader in every organization to not just read about how to grow your business, but read about how to protect your business and how to manage risk. You need to do some scenario planning. You need to look at different outcomes and how the top risks that we just talked about might influence the performance of your financial institution. So you got to do regular assessments. You got to do scenario planning. And, we think all of this is easier and you can spend more time talking about the risks than actually collecting information if you use technology to do that. And so there's a abundance of technologies out there that will help you organize, categorize, aggregate and measure risk. We think Watchtower is, particularly good at managing risk at the enterprise level for the board and for the executive team. But certainly you don't want to rely on just your brain and some ledgers in order to manage risk. And if you want more of that, you can go back to the old Halloween episode to learn about the dangers of managing risk without using effective tools.
I appreciate you wrapping with technology and tools, but I think of equal, if not even more so importance, right, was where you began with that answer of culture, right, and a culture of risk awareness and embracing risk management and engagement of stakeholders across the enterprise. And really accepting that risk and strategy are two sides of the same coin, and then also realizing that this is not a set it and forget it, right? It needs to become inherent. It needs to become part of everyone's daily life, right? You're continuously looking at evolving scenarios, right? You talk to some of those risks, right? You talked about the emerging risks. They're incredibly dynamic. They move a mile a minute, and so this can't be a situation where this becomes a quarterly check the box exercise. It really does need to become something that is inherent in the way that the financial institution runs.
Yeah, like big picture, risk is more complex than it ever has been. It's more interconnected than it ever has been. You can't, those folks who don't really understand risk, it's not about avoiding risk. It's about managing it. It's about mitigating what you can mitigate. It's about accepting what you feel you can accept within your risk appetite. And if we get a better understanding of how all these things work together, then we can achieve our strategic objectives and grow our businesses in the way that we have committed to our clients and our employees and our investors.
I like that, Shawn. I'm going to leave us with that closing comment that you made there, because I think that ties it all together very well. You introduced a handful of these emerging risks, ways to prepare and track and manage them. And I think that last comment, that it's not about avoiding risk, but it's about managing risk. And I think that we shouldn't be shying away from these emerging risks. They are there, right? We have to manage them effectively, and that's the takeaway.
Yeah. Thank you, Ed. Thanks for having me.
Appreciate it. Thanks, Shawn. Look forward to having you back soon. And we look forward to having folks back. We're going to dig into these concepts of these emerging risks, in particular cybersecurity and AI, in a couple of upcoming episodes. Thanks again, Shawn.
Thank you.